How's it going, guys? So we're gonna do a little avoid the bag special on MYSZ Incorporated, which was one of the top volume leaders for today, but really just essentially faded um, all day. And so we did play this one actually. We got in at 98 cents right here after having an alert for a drop under the 50. We got alerted and we actually waited a minute or two and we got filled at 98 cents right there. Um, yeah, and we played it. We were trying to get to the 50 again. This was 110 at this moment, but it didn't get there. It stopped at 107, came back down to test the dollar range, and then we did get to the 50 EMA of 107, and we did sell off there, and we kept about 25% of our shares at a stop loss at around 99 cents or a dollar, which, as you know, broke. Um, so after that trade, or after that moment, you could see the 50 EMA starting to curl down, trying to touch the 100, which it eventually does. Uh, and as you know, once the 50 crosses underneath the 100, it's got a lot of just bear pressure. And it did bounce off the 250 EMA. That's the last trend line you could have bought in at. You could have bought in under the 250 a couple times. But I didn't play it because I really don't like buying anything under a dollar. If it's in cents, then I'm just going to avoid it altogether. Anything above a dollar, I'm okay trading just because dollar usually acts like a pretty solid floor. So yeah, the 50 EMA came down, crossed up here. Now it's under the 100, and that's a terrible sign. That's when you know it's going to just eventually drop. There's not a lot of bull strength. The rally has failed. Uh, it did come up to test the 110s again right here after a while, but for the most part, I believe that was just a short covering of day traders. So you can see this big green candle right here is most likely shorts covering, which just gives it a little bit of momentum. But once again, it got rejected at the 110 level, which was the original place it dropped from, the 50 EMA. So it didn't really, just a failed rally. And for the most part, these levels right here, they're just too close together. As I previously mentioned, you want the 50, the 100, the 250 to have a big gaps between them, sort of like here. Big spaces where you can. There's key levels. Right here is just too much of a too much of a risk for the 50 to drop back down, which it eventually does. And when plays like this, when this happens, the when the 50 comes underneath 100, uh, the EMA lines act as a sort of a roof, sort of a bear indicator. So the bears will let it pop over a couple times over the EMA lines. They'll pop it over, but unless this 50 continues to trend up along with the 100, then most likely, more or less likely, it always comes back down. It always stays under the the new trend line. It'll always be under there. It definitely had a chance to rally right here from this point. If it stayed above the 50, that would have been a lot of bull strength, people actually buying. But since people did not want to hit the ask, and it was just a failed rally, and that's what happened. So just always, always, always pay attention to the 50 and the 100 cross, because once this happens and you're still in it, that's just a sign for you to double down, work on that average, and just get out on top. So you could have doubled down uh, at the 250 line, even if you bought up here, or even if you bought up there, you would have been around the 95-cent average. So definitely had a chance to get out as long as you didn't buy up here, which is that's just you're gambling if you're buying it at the morning high, which is pretty much all it is. That's the morning high, and you're pretty much gambling at that point. But when you buy in down ticks, like most day traders do, you still have a chance to get out, and that's what I did. I got out at 107, and I just didn't play the rest of it. If it was above $1, I definitely would have bought back in at the 250 and set a stop loss, and then probably gotten out for another quick scalp. But sometimes people just love to talk and love to pump up these plays. You just have to trust your indicators, your personal indicators. Mine are different from everybody else's. There's tons of strategies out there. This is just my personal one, but I've always noticed once that 50 crosses the 100, it's just a sign of bear strength, not bull strength. If it would have stayed above the 50 right here, that would have been a great indication. But no bounce back, no bounce back on the 50 level, no bounce back on the 100 level right here, and minimal bounce from the 250. It's just a scalper's play. There's no rally here. So hope you guys got out of that one. And always trust your indicators and not the rumors, not the news. Just trust the volume and your indicators. And yeah, hopefully you guys got out of that one. Just trying to explain a little better for the beginners out there who get trapped holding the bag on this. So hopefully new play tomorrow.